Now, this strategy, guys, okay, is pretty much based on the 4 minute or the 5 minute, okay, and we're looking for trend line breaks. So, if the market's going up, okay, we're looking for trend line breaks either on the main trend or trend line breaks on the pullbacks. Okay, so let me draw this again. So a couple ways you can look for a trend line break on the main trend. This is the main trend right here. Okay, if it breaks it with conviction, I'm looking for, you know, a trade to the downside. Okay, now with the pullbacks, okay, so let's say that we have a trend right here to the upside. Pullbacks, we are looking for, continuation. Okay, so we have a nice little trend line right here. The pullback, we're waiting for price to break this trend line, this pullback trend line right here. All right, and as soon as it breaks this trend line, we're gonna go to the 1 minute chart and we're gonna look for entries. This is what this strategy is all about. Okay, now why do we want to look for trend line breaks? Well, because number one, when it breaks this trend line, guess what? We get a lot of volume out of those breaks. So when it breaks, volume comes in the market, and that's what traders need. We need that volatility so we can actually make some money. We need the market to move, right? So that's why we want these breaks. That's why we want to take advantage of these breaks. Okay. Another reason why is because a lot of supply and demand areas come out of these breaks. Okay, you want to see it. And the next reason why is because, and I learned this from the stock market. Okay, let's say that the market is going up. Okay, so let me erase this real quick. So it's something called front side and back side. So a front side move is basically when the market's going up. Okay, you have a lot of people try to short the front side. Okay, the reason why it's the front side is because the market never broke structure. Okay, you're trying to time them to move and hoping that the market will go down. Now, you could short this way, but it's much easier to wait for confirmation for the market to break structure. Okay, and this move right here is actually called the backside because think about it, you are behind, okay, this trend line right now. Okay, before you was in front of the trend line, now you are behind the trend line. This is called the backside. The reason why the backside is much easier is because now you have confirmation that the market actually wants to move in this direction. Okay, so that's another good reason to look for breaks. Okay, so you can actually get a little bit more confirmation, and also breaks will help you with choppiness because you're only looking for the market to break out of something. Okay, now we are also looking for a triangle break. Okay, so triangle break, we're looking for that too. Okay, or support and resistance break. So let's say that we have the market is going up, and let's say we have support right here. Okay, and the market just breaks this support and it comes back. We're also looking for that too. Okay, so any type of break, we want to actually take advantage of that. Okay, now let me show you guys how the market moves when it breaks out of the trend line. So we have the market going up. Actually, let's say the market is going up. Okay, and it breaks the trend line. Let's say the market breaks this with conviction. One way the market will act is basically it will either go straight down, okay, with hardly any pullbacks at all, right? And the next way it will go down is it will actually have some type of stair step pattern. And that's the pattern that we really want because this is a predictable way to trade. So we really want this right here. And I'm going to show you guys some example on the charts. But let's say that the market's going up, okay, and we have a trend line break on a pullback. Okay, we really want the market to give us that stair step pattern. Okay. Now, The reason why is because it's very predictable. We can actually get in, okay, and manage our trade and do a whole bunch of other stuff. So I'm gonna show you again. I'm gonna show you guys some examples when it comes to that. Okay, so basically we have this trend line break right here, and as soon as price breaks this trend line, you want to basically go to the 1 minute, and also we have this break right here, this trend line break. Okay, now when it comes to trend line breaks, guys, for the most part, I want at least 2 connections, but sometimes the market is not perfect. Okay, I always say this: the market is not exact science; is more an art. So, if we have one connection, and what do I mean by one connection? Basically, if we have, I want, it would be better if the market, let's say the market is going down, right, and it pulls back, right, it goes down, right, comes back and it goes down again. It gives us 2 connections. Okay, so we got 1 and 2. So these 2 swing lows, we want to connect it. Now, again, like I said before, okay, if it breaks this, that'll be a good trend line break. But, again, the market is not exact science, so sometimes it will give us, just one swing low right here, and it goes up, okay, and we just have to use that one, and it breaks down, okay, so you might just have to use that. All right, so let's go back to the example, okay. So here was the break right here, guys, and notice how price basically went straight down, okay, and that's exactly what I'm talking about. If price goes straight down like this, okay, sometimes it's just very hard to get a trade. But notice how this trend line break, okay, what we have a nice little stair step pattern, okay, a wave pattern. We have break, pulls back, is going up in the stairs, okay, and that's what we want because it's easier to predict, So we have up move, down, up, down, up, down, up, down. So that's what we really want when it comes to, a trend line break, okay. So that's what we're looking at. And pretty much this concept is not that hard. Okay. We waiting for, okay, let's say the market's going up and it breaks this trend line. We waiting for price to break this trend line. It comes back, okay, to this area right here. Okay, we can actually put a stop loss right here. And basically we want price to react to this area and come back down. Okay. Another good thing is, let's say that this came back, it react to this right here, and let's say that we have a lot of choppiness right here. Now, a lot of times this choppiness right here, it's just basically a lot of orders right here, and if it breaks this choppiness, this right here, if it comes back to this, okay, price a lot of times will hold this area right here, and when price gets to these, little consolidations going on right here, a lot of times price will actually hold this and never go above it, and you will see price react to that. So sometimes you will actually have that right here, and price will come up, okay, hit those orders, okay, or hit that consolidation, and then go right back down, right? So that's the whole concept of this whole, trading strategy. We're looking for breaks, we're looking for pullbacks. I'm gonna show you guys overall how to get in. Okay, so let's go.